Ladies and gentlemen, welcome back to another video. I'm your host, TheDividendAristocrat, and today we're going to be talking about my most recent purchase for the portfolio. If you guys do enjoy this type of content, I would appreciate a lot if you could subscribe to the channel. I'm on my way to 2K. As a reminder, this is not financial advice, and I'm just merely sharing my opinions on this channel. So real quick, taking a look at my portfolio dashboard, we can see that I invested in total $30,200, which is up a little bit from the past couple videos, and my total portfolio value is sitting at $42,433, which is kind of similar. My portfolio value has been fluctuating a lot as of late because of the market's fluctuation in prices. In total, my unrealized gain is at $12,233. My total return is sitting at 40.51%, with a total dividend earned of $1,151, or a yearly projected income of $724. Now, what I mean by yearly projected income is that every year going forward, I'm expected to be making $724. And of course, as the year goes on and I reinvest those dividends and I get dividend increases, this number will actually continue to trend upwards. In terms of portfolio yield, it is sitting slightly lower at 1.71%, and I have gotten some more questions recently asking me about my portfolio yield and why it's on the lower end. That is personally how I prefer it. I'd rather get my growth from my total return rather than directly my dividend income, and this way I have less tax implications from dividends, but I still am able to buy quality companies that keep growing their dividend every single year. My yield on cost is at 2.4%, and that's because the price appreciation has outpaced the dividend increases. And if we look at my days change, we can see I'm up 0.36% on the day, and in total it's about $150 of unrealized gains. My cash position is still sitting pretty high for my portfolio value at $6,688, so I do look forward to making more purchases in the coming weeks if we continue to have this decline in stock prices, but if not, I'll continue sitting on this money for a little bit longer until I decide where I want to put it. So without wasting any more time, the stock I have been purchasing recently is Google, and we can take a look at my holding in it right now. So before we look specifically at Google, what I want to show you is where it's ranked on my portfolio. So if we look right here, we can see that it's no longer my top performing position, and actually just a couple of weeks ago, it was sitting at over 100% total return, which meant I had doubled my position, at least in terms of unrealized gains, but since then it has fallen down quite significantly. If you guys do want to check out that video where I talk about 3 stocks of mine that had a total return of over 100%, I'll pin it right here. Definitely check it out. It's a pretty interesting one. So right now, Google is actually ranked number 9 in my portfolio in terms of total return. But one thing I do want to clarify is that it's becoming less and less meaningful, the total return of my individual positions, because for a lot of these holdings, I actually contributed more money as the stock price went up. So what I mean by that is if you looked at my original position in Google, I actually had an average buy price of about $100 per share. But since I bought more stock now at much more elevated prices, it's actually an average buy price of $113 per share, which in turn has pushed my total return down quite significantly. Now that's not a big deal, but the reason I say it is just to explain that this total return figure here doesn't really matter that much over the long run, because if I choose to not buy any more Amazon shares from now until the next 20 years, then obviously Amazon will likely have the best total return in my portfolio. But if I continue to buy Amazon shares as the stock price goes up, it's going to in turn bring that total return down. So now filtering and just taking a look at Google itself, I think it'll be easier to get an idea of my holding this position by just taking a look at it. We can see that my average price paid, like I mentioned before, is $113.41, and the current price of the stock is sitting at $154.69, and this past week it dropped all the way down to about $147 per share. Now in total, I purchased 9 shares, 6 of which were my initial investment and 3 of which I just purchased right now. And with dividends being reinvested, yes, Google does pay dividends now, I have 9.007 shares. So while we're on the topic of my shares and how I accumulated them, let's take a look at that in my order history tab. This is where I track all my purchases in my portfolio. So on September 15th, 2022, I purchased my first share of Google at $102.85. So based on this, we can see that it's been almost 2 years since I first purchased my first share of Google, and I can't believe so much time has passed, but I actually have been holding on to that position and have not sold yet. Then on the 7th of October, I bought one more share of Google at a lower price at $98.46, and then I bought one more share on the 10th of October at $97.50, and on the 27th of October, I bought 2 more shares at $93.55. Then at the beginning of November, I bought another share at $85.32, and really this is where I should have doubled down and purchased a lot more shares, but at the time, this was already a lot of purchases for me, and I was buying a bunch of different companies, including Microsoft and Amazon, as you can see right here. And that was the last of my purchases until September 10th, 2024 of this year. And like you can see, that's about a 2-year difference where now I bought 3 more shares of Google at $149.81. Now, I would have liked to purchase these shares at a lower price, but I still thought this was a fair enough price to be purchasing more Google stock, and I have been looking to add to this position for quite a while, especially since they announced their dividend. Now, I do think that in the coming weeks, there's a chance for a further decline in stock price for Google shares, and if it does, I definitely do welcome it, and I'll be purchasing a lot more shares of this company. Compared to my initial purchase, this is still a 50% increase basically on my purchase price. So going back to my portfolio holdings section, we can see that I invested $1,020.66 into Google, and my current value sits at $1,393.29, which gives me an unrealized gain of $372 or a total return of 36.51%. Even with this recent purchase, this is a very strong total return. I think in the long run, this investment will pay off nicely. So far, I've earned $1.20 worth of dividend income, and I do think they're going to be paying out a dividend very soon. And my yearly projected income going forward per share is 80 cents or a total annual payout of $7.21. Now, the yield on this position is 0.52%, and my yield on cost is 0.71% with a total portfolio allocation of 3.3%. And like I mentioned, I will be buying more if the price continues to go down. I'll probably make this about a 6 or 7% position in my portfolio. Over the long run, I don't want to have positions over 5%, but if I overweight it at 6 or 7% now, then of course that's going to go down as I purchase more shares into other companies and into my ETFs. If you guys are enjoying the video and you've made it so far, consider leaving a like. It helps me out a ton. So before we hop into seeking alpha, I wanted to hop into Google real quick because I like the way they chart stuff. So you can see here that from the start of this year up until now, at the peak, Google was actually up over 36%, which is why it was my best performing positions in my portfolio. But since then, it has fallen pretty substantially. From its peak in July all the way now to its bottom, it was actually down over 20%, which is a pretty big decline for such a big company. And it's a very established company too. So it's kind of surprising how much it has decreased in stock price in just those couple months. Now, a big reason for that is all the antitrust lawsuits that they have been facing recently. You can see that it basically covers the headlines right here, both in the EU and the US, and they've recently actually been categorized as an illegal monopoly, which has definitely not helped their case. Now, personally, this is not something that worries me too much in the moment, and I will be keeping a close eye on it, but we'll have to see where it goes from here. I do think that even if Google split up or had to sell some of the portions of its business, I think the individual portions of the business could be worth more than the sum of all the portions together. Right now, its valuation is not traded at such a high valuation because of how much of the business is reliant on advertising, but I think some of the other different sectors of its business could be worth individually in terms of, the price to earnings ratio. Maybe they would trade at a more premium valuation. Let me know down below what you guys think about all these antitrust lawsuits and what you think it means for Google. Also, I'd love to know if you guys agree with me purchasing more of the company and if you're purchasing any more shares yourself. So moving into seeking alpha, we can see that year to date, they're only up 10.67% now, which is not that impressive compared to where they were sitting before. In the past year, they're up 14%. And in the past 5 years, though, they are up 150%, which is much more substantial and nice to see. In terms of the past 10 years, the company is up over 400%, which definitely makes it a very good performer, and it outperforms the S&P 500 by a substantial margin. You can see right here that unlike a lot of the other companies I've been covering, it is no longer close to its 52-week high. It's basically halfway between its 52-week low and its 52-week high, which could be a decent range to buy it in depending on where you think it's going to be trending in the future. Now, real quick, we'll take a brief look at their financials. It's a very solid company with quickly increasing revenues, and it has mostly, like I said, the main revenue stream is their advertising, but it does have other sources of income such as YouTube. The same kind of growth can be seen for their earnings per share, and their weighted shares outstanding have been going down pretty aggressively over time. Google usually authorizes about a $90 billion share buyback program per year, which is one of the largest in the S&P 500. So the only two other things I want to take a look at real quick for their financials is their free cash flow per share and their capex investments, and that's because they're very important to look at because it's a lot of the reason that the stock price has been going down over the past couple weeks. In terms of free cash flow per share, I actually did set it to a quarterly range instead of a yearly range. For the annual range, like we saw before where the revenue was going basically straight up, but over the last couple quarters, the free cash flow has been decreasing pretty significantly. Now, the main reason for this is they have been investing a lot into capital expenditures, and as you can see right here, the last couple quarters have been huge for the company, and it's been definitely chunking into their free cash flow. Now, I do think that they are over investing into their infrastructure. A lot of this is AI related, of course, and also cloud related, but I think in the long run, it's going to be totally fine as long as they're investing back into the business strategically. I don't think it's going to hurt them too much in the long run. If they're investing now, it's fine because they can ease up on the capex over the next couple years, which will in turn, of course, increase their free cash flow. Now, I do want to just briefly look at their dividend stats. There's not much to see here. Their dividend growth history is 0 years, unfortunately. Their 5-year growth rate is non-existent, and their pay ratio is a very low 2.87%, but that's because the dividend has just recently been initiated. Now, what I'm hoping for is that they're going to become a dividend growth company, so I do think that over the next couple of years, they're going to be increasing their dividend substantially, and I hope at least at double-digit rates, but we'll have to wait and see. I think in early 2024 is when we'll find out whether or not they're going to be increasing that dividend payment. Now, in terms of valuation, Seeking Alpha does give it a D+, but compared to other companies in the tech sector, it's actually not that bad at all. It's trading at 21.69 price to earnings ratio, and on a forward-looking basis, it's actually trading under 20 for their price to earnings ratio. Now, historically, Google has traded more rich than this, sitting at over 25 price to earnings ratio, and you can see that there's a pretty big decrease to their 5-year average. Now, the price to earnings ratio by itself does not actually mean whether or not a company is undervalued. It'll depend on a bunch of different metrics, including their growth rates and their future expected growth rates. Now, speaking of growth, we can see their growth metrics right here for the revenue. The revenue growth year over year is up 13.38%, and the revenue growth looking forward is expected to be at 10.97%, which is also very strong. I like to see those double-digit growth rates. Now, in terms of their 5-year average, the revenue growth has actually slowed down clearly. Because of COVID, they had a very big boom in revenue, and it surged pretty aggressively at 18% year over year revenue growth on average, and then their forward-looking growth was 16%. So it's a pretty big decline compared to their 5-year average, and that's a big reason why their price to earnings ratio is probably lower today. It's trading a little bit less of a premium because the company is not growing as quickly. One of the last metrics I want to take a look at are their profitability. Their gross profit margins are very solid at 57.64%, and this is to be expected. They are a tech company, but they have been a little bit heavy in the past couple of years. A lot of employees in the company, so I think it's definitely been a little bit bloated in that regard, but they have been doing a pretty aggressive amount of layoffs. Now, I'm not sure whether it's the layoffs or Google Cloud becoming more profitable or just general price increases, but their profit margin is actually sitting higher now than its 5-year average, which is good to see. Now, before we end this video, I do want to compare Google's performance to the S&P 500. So we can see that year to date, the S&P 500 is outperforming Google by quite a bit at 17% for the S&P 500 and only 10% for Google. In both the past year and 3-year timeframes, the S&P 500 outperforms Google by quite a lot, but we can see in the past 5 years and also going forward to the 10-year metric, of course, Google actually brings it home at 149% over the past 5 years. As always, that does bring us to the end of today's video. I really hope you guys enjoyed taking a look at my holding in Google, my recent purchase in Google, as well as a deep dive into some of their financials. If you've made it this far into the video, let me know in the comments down below whether you purchased any more shares of Google or if you're buying any other companies at this time. Also, if you're not buying Google right now, let me know why not, and if you agree with my decision to add more shares into my position. If you guys haven't yet seen last week's video where I review a portfolio sent to me by one of my subscribers, check it out right here. And if you want to see how much dividend income I received in the month of August, check out this video right here. Remember, the best time to invest was 10 years ago. The second best time is today. I want to thank all of you guys for watching, and I will see you in the next one.